Welcome to my weekly review. We have a very happy bear saying hello. And, when you go to the zoo, you're not supposed to feed the animals, but these two, Brainerd and Powell, have been feeding the bear, and they've been stealing money from your 401k account. So don't let them do that. Anyway, we're going to take a look at some of the indexes. The S&P 500 undercut its low from June here and started its third leg down. The first leg was back from January 4th into the into February. Then it had a second leg from March down to June. Then June 16th, we had actually nice summer rally there. June 16th to August 16th, exactly 2 months. And now since August 16th, we're on our third leg down. It undercut the lows. So did the Dow Jones Industrial Average. That one is making new lows as well, and very similar to the S&P. The Nasdaq, however, and the Russell have not. So the Nasdaq here, yeah, it's 19% on this last leg down, but it did not undercut the lows here. Give it a couple days. My expectations, I'm not predicting, but my expectation is that we revisit these COVID lows, which is not that far away, really. 98.38. One of COVID lows, pre-COVID levels. Sorry about that. 98.38. So my expectations at least there, and who knows, maybe it could make it down to 83 or 81 as another possibility. You never know. Keep an open mind, be flexible. But anyway, I trade stocks. I don't trade the indexes. So I want to look at some of our leading stocks, what I call our peacocks. Yeah, they're just spreading their feathers there. How about that? Spreading their feathers and saying, come hither. And these are the stocks that I like to trade and that they're showing some strength. And I think if the market ever cooperates, they could be leaders, if the market ever even goes sideways. But this is ENPH, a weekly chart of ENPH. You can see the base here, and it broke out on earnings, and it's held its prices. This is down from like 220, 220 to up to 324. So it's holding its gains. It has not filled that gap there yet. So wouldn't be surprised if it did that. Return to 220, that'd be a big move. But anyway, it's holding its gains. It looks great, especially on the weekly chart. It has the fundamentals. It's still a richly valued stock. I mean, it's 38 billion market cap, for about 2 billion in sales. So it is a richly valued, a lot of growth priced in. First Solar is performing better, though. This one's above the 21 EMA, and it does not have the fundamentals that and growth that we'd like to see. But, as Brian says, price pays, and this one's paying. You can see the 16 or 17 week sell-off. Formed a base here, then broke out. Now it's holding its gains nicely. Like I say, anything above the 21 in this tape is pretty strong. This is Celsius. It did fill that gap here, 89.05. See, it gapped up on the Pepsi news. Now it's closed the gap. Maybe it'll form a base here between 80 and 100. That would be nice. You can see on the weekly, nice consolidation here. Nice round symmetrical base, the breakout and then the pullback. So that looks like on the weekly a nice cup with handle pattern. And let's take a look at LNTH, because this one's been up like 130% in 2022. Gapped up in February, gapped up in April, and it's been supported by its moving averages, which are trending higher. Yeah, it pulled back, sliced its 50, and it forms a base here between 60 and 80. That's great. Yeah, like I say, you got to expect profit taking when you're up this much in a year. So let's take a look at Supermicro, another one. I want to take a look at the weekly again. You can see the consolidation, base on base, finally broke out, but this is too vertical, and so it pulled back, and that's kind of normal. Those are prone to fail when you just come right off the bottom and rip through everything. That went from 37 to 74. So a two bagger. So yeah, so it's going to pull back, and if it trades between 50 and 60 and forms a base, you still want to pay attention to this one. It has outstanding fundamentals, extremely cheap stock, 2.8 billion market cap for about 5 billion in sales. Ridiculously cheap. I know the industry. There was no doubt that the industry is slowing down, but that's a really nice fundamental stock right there. I like biotechs. I'm gonna take a look at a few biotechs. Like I said, sideways is showing strength in this tape, and that's why it's got the blue dot here. It's just going sideways here with the relative strength compared to the market. And if you can see on the weekly, nice symmetrical consolidation pattern here. This to me just looks like a big old cup with handle. And if the market ever cooperates, or this one probably doesn't even need the market to cooperate. When it feels like going, it's going to go. And 306 there, I like it over 306. Yeah, that one looks good. Lilly's another one that, keep my eye on this one. It's a slower mover. You can see the consolidation base after base, the Dolly Parton pattern here. And then recently it kind of broke out, up to its buy area, but that to me, that's not actionable. You can see the relative strength, on a tape like that. If you get a move like that with the market going down, that's really nice relative strength. NBIX is another one, Neocrene Biosciences, once again going sideways, and the relative strength is just straight up because the tape is so weak. But you can see from this pattern here, nice consolidation, little handle here. Keep your eye on this one. That one looks pretty good. I want to show you this one, Intercept, because I always say it's either the outhouse or the penthouse. And those other stocks are in the penthouse. This one, got treated to the outhouse. You get bad news in biotech, and it's down to the outhouse. I want to take a look at a couple of other stocks here. We know that stocks travel in packs like dogs, and I want to take a look at the computer software medical. This is Mr. Eddie Van Halen. You can see this classic cup with handle breakout, and then it was supported by its moving averages and now pulled back, maybe to form a base between 30 and 40. Take a look at the weekly here. You can see this is classic cup with handle breakout. So Mr. Eddie Van Halen looks pretty good to me. Its running mate is PRVA. Again, this is just a nice cup-shaped pattern on the weekly. On the daily, you can see that it formed this cup with handle pattern and broke out and ran up nicely, from 27 to 44. And now it's pulled back. And if it forms a base between 30 and 40, that's great. As far as I'm concerned, one other stock I want to look at is Aspen. This is a really thinly traded stock. It's so thin, it's got to run around in the shower to get wet. I've never owned it, but like Brian says, price pays. And this one's paying. So congratulations to the longs. A nice cup with handle pattern and broke higher. So good job to the longs on that one. Another group that I want to look at are the renewables. This is a Constellation. It was a spinoff from Exelon. You could see that the consolidation here and the breakout, then traded higher, got supported by the 21. And I'll take a look at the weekly in a minute. I think it closed a little below the 21. Yeah, just like 1%. So this one's hanging in there nicely. A breakout, holding the gains. Very nice. And its running mate, Montauk, is another one that I like here. There's quite a few in this group. I'm just going to look at these two, though. This is a relatively new issue as well. You can see consolidation, run up, and then a pullback. So it's pretty standard in this market. But it's still, above it's 50 and just a tick below it's 21. So this one's holding nice. And actually, it's actionable right here in this area. I want to take a look at the biotech ETF XBI, because as the indexes are making new lows, this one's not. You got to look at the weekly here. This had 18-month bear market or pullback or downtrend or whatever after the COVID highs. And then it had capitulation selling here in May. It had the highest volume it had in years, and then retested those lows in June. And then it ran up, and it's been rejected at its 200 simple moving average a couple of times. But, let's see if it makes another charge and can run through there. I think with a little cooperation from the indexes, that one could blast through the 200. LABU, take a look at this one. I have it marked up here. Yeah, I made a bottom on May 12th, 438, then retested, actually undercut $4.06 on June 16th. But if you take a look at the 30-minute chart, it retested that again, $6. This is last what, the 23rd. Then last week it came back again and retested the 6. So if the shorts can't push it down any further, it's got to go higher. I mean, it could go sideways, but that was a good buy point right there, $6, and it's 50% above its lows while the indexes are making new lows. So hello, McFly, that thing's telling you something. So good for a day trade. I do not trust anything in this market. This is a scalper's market, no doubt about it. Don't try to get too crazy here. The bears are definitely winning the battle now. I'm real superstitious though. At mcstockcharts.com, we believe the calendar change could bring us better fortunes here in October. Certainly could not be worse than the November, or what we saw in November. The Nasdaq was down. Let me get on the daily here, 10% in the month of 10% in the month of September, 10.5%. But stocks go up and stocks go down. This thing was fueled by the Fed for years, and we had a heck of a run. So just to give this little bit back is not asking much. I mean, you would expect a little more of a give back. I would expect a little more of a give back, and just got to be patient. You got to be vigilant. You got to look every day. Watch every candle, and pay attention, and never give up.